Hi folks, welcome to this video on version 2 of your quiz. And in this version, we have a balance sheet or statement of financial position with selected account balances that looks very similar to our first version of the quiz. The only major difference here is that you'll notice in this case you have land held for sale. Now because the company, Bella, is following IFRS, we need to remember that when land is held for sale, if its original classification is a non-current asset, which it would normally be under PP&E because it's used to help us generate revenue in the business, right? Whenever you change its purpose under IFRS, in this case, we're changing its purpose because now we're selling it. So in this case, when we change it, because we don't know if we're going to sell it today, tomorrow, 6 months from now, we consider it to be a current asset. So because it's held for sale and under IFRS, we change classifications. Now, if I had changed this question and said Bella follows ASPE, or Accounting Standards for Private Enterprises, then even though it's held for sale, it retains its original classification, which would have been part of PP&E. So you had to be careful of that. Now, you would have also noticed here in the additional information, I changed it a little bit there because I said that the cash balance of $90,000 included an overdraft of $1,500, but unlike the first quiz, this overdraft account was held at the same bank. So it was fine to net it out here. You didn't have to make any adjustment of that $90,000 for the $1,500 because it's at the same bank, so they deducted it and that's fine. You also see here you had a term deposit. That term deposit, as with the first version of the quiz, is a cash equivalent. So now that we have a cash equivalent, you would have had to make a decision. Do you want to put the cash equivalent in a separate line under cash, or did you just want to call the first account in the current assets section cash and cash equivalents, as we've done in previous courses? So that would have been up to you. And petty cash, of course, is always a current asset, cash in the cash section, so we didn't have to make an adjustment for that. So you could have left that $90,000 as it is and just changed the account name to cash and cash equivalents. So once we get to looking at the presentation, we'll show you what that looks like. Now, with your accounts receivable, we can see, just as we did in the first quiz, we have a balance here of $52,200 right here. Okay, so now what does that mean to us? Well, that means because it's at net, it must be net of the allowance, which is fine, but it includes receivables for consignment goods, and we don't have receivables on consignment goods. So this net value here of $52,200 is $5,000 too high. So our net value should really be $47,200. So when we get down to the current assets section, we'll show you how we can kind of work through that to get the numbers. Now, our inventory is sitting at $57,000, but here in item 3, it says it doesn't include $5,000 that are out at a dealer location on consignment, and by definition, we know from our course that it is ours. So we needed to add that $5,000 to the $57,000 to come up with $62,000. We also see that our investments account here is sitting at $76,300, and it includes $24,000 of fair value through net income investments, $43,300 in fair value through OCI investments, and patents of $9,000. Now, what you would know here is that patents are intangible assets, and they're in the non-current assets section. So by definition, they're not going to be part of your current assets section. We also know that fair value through OCI investments, they're non-current. They're in the long-term investment section, so they're not part of your current asset section. So the only one here that you have that's part of it is your fair value through net income investments. These investments are also known as trading investments, and if you look back to the sample financial statements in our course, in our chapter, you'll notice that they have them also noted as investments that are trading investments, and we talked about in class how they were similar terms and why. So that would have shown up in your current assets section at their fair value. Now, another additional piece of information we have here that you guys didn't see in the first version of the quiz is that fair value through OCI investments are valued at $45,000. Now, don't forget, in our statements thus far, they're sitting at $43,300. So we have to figure out how are we going to handle that $1,700 difference. And we'll talk about that in a few minutes. So now, in the required, in preparation of the current assets section, we needed to realize that, first of all, we needed to show the account receivable at its gross amount. That was part of the instruction I gave you, at its gross amount less the allowance balance right here. So now, when you were doing the assets section, you would have had cash and cash equivalents, I should say. And cash equivalents here at $90,000. Or what some students might have done is they might have just kept it at cash, which would have been fine. They might have put this at $87,000, which they could do. And then what they would have done, I think one student did it this way, they had a line for cash equivalents and would have had that as $3,000 right there. But that wouldn't have changed your current asset section balance. It still would have been $255,200. So that wouldn't have changed anything. But I'm just going to put it back the way it originally was, just to make sure that it doesn't confuse people. Keep it the way it was. Now, underneath here we have the accounts receivable. Now, I mentioned to you, because in the question we had them at net at $52,200, we knew it was overstated by $5,000 because there was $5,000 in consignment receivables there, and we don't have receivables on consignment goods. So I started out by thinking, well, what should the net value be? It should be $52,200 less $5,000. It should be $47,200. So what number at the gross amount, such that when I deduct $4,800, would give me the right net balance of $47,200? Working backwards, I'd get $52,000, which you might have wanted to do. Another way you could have thought about it, so that first method that I talked about is just up here. The other way you could have thought about it, some students said, well, why don't I just take the net balance as I had it at $52,200, and if I add my $4,800 to it, I'm going to get a gross balance of $57,000. But I know that gross balance includes $5,000 in accounts receivable, right? That shouldn't be there because I don't have receivables on consignment goods. So it should be $57,000 less $5,000. So what you might have done is you might have said, well, that needs to be $52,000. So instead of working from, as I did in this top half, from the bottom up, you could have worked from the top down and made the adjustment here. Minus $4,800 because there was nothing wrong with the balance in the allowance account, and you would have wound up with $47,200 that way. So either way would have been fine to do it. So now what I need to do is I need to go back to my problem and get rid of this guy because I don't need it. So now I have this amount in my inventory, which is $62,000. And don't forget what I said earlier is that we had inventories at $57,000, but again, they excluded the $5,000 consignment, which should be included because it's your inventory. So we added it in to get $62,000. And the land held for sale, because we're following IFRS, the land held for sale has to change classification from being in PP&E to a current asset, which is $32,000 in that section. So we would have wound up with $255,200 in our current assets section. So now, to answer our question, what would our current ratio be? Well, if you use those current assets divided by your current liabilities of $75,000 given to you in the question, you would have had 3.4. And the question also asked you to calculate the final balance in AOCI. Now, the AOCI balance, you'll remember, has to include any gains or losses in those fair value through OCI investments. And we had an increase, or a gain. It was sitting at 43.3, but now we need to make sure that if we did the long-term investment section of the statement of financial position, we showed it at 45,000. But I didn't ask you to do that section. But you needed to remember that that increase in value gets included in your AOCI. Remember we said OCI is to AOCI as income is to retained earnings. Any gain or loss on an OCI fair value through OCI investment shows up in the statement of comprehensive income as other comprehensive income. So therefore, when that OCI account gets closed out to AOCI, it updates it. And in our case, we put $1,700, which is the difference between the ending balance of that investment at $45,000 and the balance we had, $43,300. That $1,700 balance is added to the original balance of $100,000 to give you $101,700. So this concludes our review of version 2 of your quiz. I hope you found it helpful.